The last important non-recurring or non-operating item is basically changes in the accounting principles. And by the word itself, we can understand that changes in accounting principles mean that we have now changed the original accounting principle and we now have a new accounting principle. Now, an example can be that, let's say we have changed the inventory valuation method from say FIFO to LIFO. This can be a change in the accounting principle, and because of these changes, there can be certain elements within the income statement that may change. So changes in income statement may happen because of these changes in the accounting principles, and these changes are reflected in the profit and loss statement or the income statement. The second important thing is the changes in accounting estimates. Estimates are important because the management or the company actually presents financial information on a periodic basis, and these estimates are necessary, and we have seen that estimates also changes, not very frequently, but yes, they do change. An example can be that, let's say, company is using a machinery and they may have earlier estimated that the useful life would be 10 years. Maybe after 5 years or so, they realized that the machinery has another 10 years to live. So there can be a change in accounting estimates, and these changes in accounting estimates actually results in the corresponding changes in the income statement. Let us now see how changes in accounting principles or estimates is reflected in the income statement. We have earlier noted that the unusual or infrequent items was considered above the line, discontinued operations was below the line, extraordinary items was below the line, and changes in accounting principles or estimates is also below the line. So the line which we are obviously talking about is the profit after tax. So here the changes in accounting principles or estimates, which is written net of taxes, is considered below the line, and let me put some number here. 10 could be the number. So here we have seen this is a positive change. So another thing which we have to kind of just redo in a very small way is that we will call this PAT as PAT from continuing or recurring operations, like the one which we have done in the case of EBT. We're calling PAT as recurring PAT, and final PAT will be the PAT which is because of the recurring as well as the non-recurring items. So this would be 170 plus the sum total from these three items. So this comes out to be 230. So this is how you can incorporate the unusual or the infrequent items.